Morning, everybody. It's the 19th of May. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate. All right.
Yeah, not too bad, thank you. All looking a bit like a
Bit wet,
bloodbath this morning.
bit wet out there. Yeah,
Yeah,
and it looks like a blood on the streets. Um, yeah, I mean, we could dive straight in if you want. I've sort of like been looking at DAX obviously this morning after the gun to head trade yesterday, and sort of like the formations we talked about at the start of the week. The hanging man candles have really played out nicely on the indices, especially
okay.
DAX.
Yeah, well, let's get stuck straight in then. I mean, in terms of headlines, there's a fair bit going on. Maybe refer to those as we're sort of going along on the charts.
Yeah,
Obviously, futures all low this morning, continue to be feared over inflation concerns. Signs that some of the areas that have been rallying are calling, particularly seeing this with commodities. Certainly, the mining stocks in the UK are all taking a bit of a hammering today, and that's having quite a negative impact on markets. And just a bit of calling off in some of these other speculative areas of the market, like these SPACs, these special purpose acquisition companies, meme stocks, and cryptocurrencies. So, all taking a bit of well, all having a bit of a setback today, given the massive rallies that we've seen. So, Steve, let's get stuck in. What you got on the DAX?
yeah. Obviously, just quickly highlight this expanding wedge formation that we talked about a little while ago. We seem to be above it, but now I think we can safely redraw this line because it can take into 1, 2, 3 points now. So that is more of a trend line than the previous one was, which took in this point here and 1 point here. So yeah, and the hanging man candle for me, this bearish outside candle of the week of the 19th of April, the hanging man candle of last week, and hey ho, we had a little spike to the upside, which we talked about from Monday when I was short of DAX, and put the stop at 15,545, and we got within 3 ticks of it. So the previous 2 trades, I got stopped out by 2 ticks before a substantial rally in gold and a sell-off in stocks. And this one I managed to hold on to. Yippee! Lucky me. And so if we go onto the 4-hour chart, though, for us, there's still a big sort of, could be the start of something big potentially. We've got this double top pattern here, which we broke, and we've hit the measure move target. Happy days. The measure move target on that was 15,200. So we're there now. So that's played out. So what it does from here is a sort of a little bit of it can have a bit of a correction because it's had a decent sell-off. It's achieved the target. But however, we've still got this potential triple top pattern. And this, for me, would be a huge sell-off. So you heard it here first. I'm not going to beat about the bush. This, if we do break 14,800, we're heading to 14,135. I feel a little bit more confident after yesterday's aggressive sell-off because this is the ridiculous trade idea that I suggested yesterday on the gun to head challenge, and that I highlighted basically the triple top target. Actually, no, I didn't. It was that was only that wasn't quite the triple top target. The triple top would be confirmed by a break of 14,800. So I was basically targeting a move towards that neckline. But it did get a little bit of, I mean, I could have had the stops ultra tight yesterday. It didn't go against me at all, the trade. So, but it's played out really nicely overnight, carried on. So that's all good. Again, weekly chart on the Dow, hanging man candle, and look, we're sort of heading towards the real horizontal support there. Let's put it as a blue line because it's a support line. It's coming in at 33,736. We're not far away from that, only a mere 180 points, which is nothing in the DAX. Sorry, in the Dow. Obviously, there's a weekly chart still, and we can see that there is potential for a decent double top in the indices as well, in the Nasdaq as well. This is the tech sector, but these candles did give us a bit of a hint. Doji candles, hanging man candles, and again, we're seeing the real sort of sell-off. If we get a break below last week's low of 12,924, then we really are looking to target this swing lower. S&Ps, we drew this pretty aggressive trend line, and we're trading below it after the hanging man candle of last week. So again, under pressure. Expanding wedge in the Aussie 200 on the weekly chart. See volumes dropping off as well. Volumes going down while price is going up. Bearish divergence, expanding wedge. It's really hard patterns to trade, but again, we're seeing good candles from a bearish perspective, and again, looking for really a break of 6,895. We're not far away from that, only 35 points away from that. And this is obviously the commodity sector that Joe said was having a bit of a bash. Nikkei looks like a bearish outside candle from last week, and we're getting the follow through this week. So again, really sort of going to target last week's lows, 27,133. Nikkei, China 50. In this sort of sideways channel, but I think it's a bearish flag. The bearish flag will have a targeted move down towards 13,645 if that plays out. So obviously we had a bullish outside candle last week, which went against all of the positive, because the China 50 seems to be sort of like correlating having a decent correlation, negative correlation towards the rest of the indices. So they're selling off. This is having a little bit of an uptick. However, it's on the daily chart. We can drill down and we can see the shooting star candle from yesterday. If we can get some follow through on the downside on China 50, then this for me again is pretty ominous. I think China 50 is the one that's going to lead the way eventually. So looking at commodities, I did a little bit of analyzation, good word, on crude oil. Bearish outside candle yesterday, so that's pretty negative. We've got storms and bad weather kicking off the Gulf Coast. That's having an impact on the refineries. Also had an outage on the Colonial Pipeline after it was taken out for a week by the cyber attack. The added security seems to have had an impact on people putting in future orders, so that's not good. I think they've sorted that out, but there's sort of like things going on there which lends to sort of more positive price action, but the market is shrugging it off, and sort of like we're seeing this negative dominance at the moment. That's on the daily chart. So let's look at the real levels. I'll take this level out. It's not as important in my eyes, and this one I think will be a little bit more important. $63. A break of there for me would be the double top here. Double top here. That'll be the neckline, and we should get a measured move down towards $60. Again, $60 is just above $60. $60.56 is where we found support previously. The double bottom, which was intra move. We've talked about other levels. 57.16 is the real line in the sand for the bulls. A break below there should open it up and move to $54. I'm not saying that's going to happen. We've obviously got 3:30, we've got inventories out, so anything can happen. And obviously we've got Fed minutes later, I think, Joe, maybe.
Correct.
Yeah, so that's it on crude oil. Now, gold. Obviously, with the stock sell off in a normal market, then we'd normally get a sort of safe haven drive higher in the gold. It's not normal markets anymore. We don't get normal markets, so it's not quite as straightforward as that. And a lot of the time, obviously, we saw last year where gold actually went with stocks when they had the aggressive sell-off, because gold positions were liquidated to fund the stock positions that traders wanted to keep hold of. So it doesn't seem it's gonna have the flyer that we were hoping. We're really looking for a break of 1875 to target a move towards the 1900 psychological level. Also, that's the 78.6 fib retracement level, and then on to the 1960 level, and then potentially onto all-time highs again. It is building a little bit of a sort of bullish flag at the moment. I suppose we've got to let's really sort of like drill down and sort of see which really where the supportive level is. I'd say it's around about 1860, 1863. It comes in at. Below that, 1850 should hold nicely. And yeah, I just sort of like, it does feel like it's going to go higher, but it could be, it's overbought conditions on the daily chart trying to unwind. Once they do unwind, I think we've really got to watch gold. It seems to be a sort of like, it pops higher when no one's watching. So let's not watch it. Let's look away and see what it does. On the cryptocurrencies, who'd have thought it? Negative. So we've talked about this. The ABC correction has played out, and we've sort of finished off nicely. This is a 4-hour chart. It's posted a bullish hammer on the 4-hour chart, slightly positive, but we were trading below the 40,000 level for a while. Got down to 38,500 on this chart. Everyone and his dog is talking about the 30,000 level. We can sort of like see this from a sort of the previous swing highs. Let's get that in there. That comes in at 28,387, and you can see it was this nice wedge formation. The break above here, well, could even say there, break above that sort of flag formation, saw the move extend higher. There's not really a lot between the 40,000 and the mid 30,000 level, but yeah, the man on the street is talking about Bitcoin support at 30,000. So for me, that tells me that if we do manage to get to 30,000, we're going to flush through there and stop all the punters out. So potentially, really, for me, from a technical perspective, the support in Bitcoin, the long-term support is around 20,000, which was the swing high and the high for a good number of years. So yeah, on the back foot, can't really see that changing. So yeah, back to you, Joe, on the FX.
Yeah, cool. So just in terms of cryptocurrencies, obviously we've seen Elon Musk has impacted that with a flurry of tweets, but also to add further pressure to that, we've seen China's central bank conveyed a statement reiterating that tokens cannot be used as payments. A statement was posted on the PBOC's official WeChat account and said that digital currencies cannot and should not be used on the market as they are not real currencies. So that's pretty strong from China. And obviously that's having quite a significant impact on the price at the moment, and clearly the momentum is on the bearish side. Just over to the currencies then, sort of fiat currencies that is, and what's going on with those. First up, looking at the dollar index, as we often do as a starting point, and that really got smoked yesterday. Quite a big move to the downside. Clearly no signs of that slowing. We've got the daily chart here, and as you can see, we remain trapped within this bearish channel. Yesterday was what I was talking about just a moment ago. Big sell-off to the downside. We did stall, however, at this support level that was posted back from the 25th of February, and that's also an 88.6% fib level. Not the most well used, but clearly has done a bit of a job in stalling the sell-off today. Are we going to see a bounce back from dollar index? Not entirely convinced, because clearly the trend is very much lower. Although we do have a couple of things later on today that could impact the dollar index and get things moving. Most notably the FOMC minutes, which are due out at 7 p.m. tonight. So all in all, still looking pretty bearish for dollar index. In terms of euro dollar, flip side of the dollar index, we are trading within a bullish channel, and again we're at this resistance level, or what was support level in the dollar index from the 25th of February, and we've rallied into that level today and posting a bit of a shooting star candle. I know it's very early in the trading session to be calling that, so we need to wait and see what happens, but quite interesting nonetheless. Obviously we saw a big jump in volumes a couple of days ago, and that was actually on a doji candle, so quite a lot of participation in and around this level. but with no real sort of movement either way. And the melt up to the upside has been on decreasing volumes. Whether or not that's something to worry about, obviously time will tell. But we're into this resistance level now. Obviously, if we get above that, we expect to remain within this British channel and head towards these highs that we posted back in January at 123.44. So interesting times for anything linked to the dollar. Will we see some bullishness come back into it, or will we just see a continuation? There is still faint hope, I think, on euro dollar and dollar index for a top or a bottom to be in place. Sorry, it's an awful line I've just drawn there, but are we seeing a rounding top formation on this? If it breaks above these highs, obviously it totally invalidates that theory. But while it's below that, there is still the potential for a top to be forming, and we could see a sell-off down to these levels here, which is at 117.02. Elsewhere, Aussie versus US dollar. Not a lot happening here. Price action is quite sideways, really. So not really tracking what the other dollar currencies are doing. I guess there's probably some mining influence involved in that as well. Obviously, mining stocks have taken a bit of a battering. Things like Antofagasta in the UK, which is really heavy on the copper side, but also some of the more diversified miners like BHP and Rio Tinto. If we look at cable, that continues to look pretty strong. We're testing these levels up here at 142.41, which is the previous highs that we posted back on the 24th of February. We had some numbers out this morning from the UK, inflation numbers, which came in as expected at 1.5, so no real surprises there. Looking at some of the other dollar pairs, obviously dollar CAD continues to get a battering, although we did post maybe a bit of a hammer candle yesterday, but we've done that on a number of occasions in the past few sessions, and it's never really led to anything. Clearly, the dominant trend remains very bearish, as you can see here from this wedge that we're trading in, or bearish channel. Dollar Swiss, again, another example of a dollar pair trading within a bearish channel. Again, it broke below support yesterday, having a little bit of a fight back today, but unless we can break out to the upside above this bullish bearish channel, then you've got to think there's going to be more downside on that. And dollar yen has been my sort of favorite pair if you were looking to speculate on dollar longs. We are approaching this trend line here. And we need to see a break above this resistance level that's now formed at 109.70 for then a move back up to these highs that were posted on the 31st of March at 110.96. That pretty much wraps it up on that front. What I will take a quick look at actually is some of these mining stocks. Quite interesting, I think. This is Antofagasta, which is a big copper play, which is listed in the UK. As you can see here, it's really testing some key support here, this 25th of March level. But more interestingly, the volumes have been quite massive in the last few days on the back of this selling. So are we seeing a bit of capitulation? Are we seeing people taking their profits? These mining stocks have had some substantial moves to the upside from these March lows.
Glencore, you've got Glencore on there as well, Joe.
Have a quick look. So
yeah, like that. Look.
Yeah, bang on the trend line as well, and this horizontal support. So it really is a bit of a day of reckoning for Antofagasta, and that may be seen across the board on some of these other stocks as well. Let's just have a quick flick through them. So Glencore. So Glencore are sort of like more of a fund, I suppose. They take positions in.
Yeah, they're a trader as well as a miner, aren't they?
They are, yeah. So no threats to the uptrend at the moment on that. It's probably looking a lot more stable than some of these other plays. Obviously, there'll be a lot more diversified positions in this as well, rather than with Anto, which is sort of a pure copper play. On the shorter term trend line, you could argue maybe it's coming under a bit of a challenge, but also we've got this horizontal support at 306. But they've had some pretty strong moves to the upside, and again, a little bit of volume increase in recent sessions. If we look at some of these diversified ones, BHP Billiton is one of the most diversified operations, pretty much all over the world in all variety of metals. So no immediate threat to the trend line there, but they are starting to look a little bit wobbly, I think. And obviously these have led this move to the upside, really in certainly in the UK markets. So if we start to see these all start to collapse, well, not collapse, but correct, then they are collectively quite a significant weighting on the index, and they will have a say on it. So
yeah, I suppose it's sort of like a lot of it links back to copper. Obviously, copper has sort of like supported a lot of these as well, and has an extraordinary rally over the year, really.
Yeah, I mean, these things could do quite a lot to the downside and still be bullish because, you know, they do need a correction in order to create some value for shareholders, really. There's a nice long-term trend line. You know, I think if we see prices back down to sort of 58 pounds on Rio Tinto, then, you know, for me, that'd be a pretty decent opportunity to buy, given the strength of the uptrend.
Yeah, cool.
Okay, so gun to the head trades from yesterday. Steve and I did all right for a change. We had shorts on the indices. So I went short of Euro Stocks 50, making 39 ticks or 1.3 R, 1 R. Steve, you made 1.61 R. Obviously, these things have continued to collapse overnight with the Asian session. So we would have done better had we not had this self-imposed 9 p.m. cutoff. But that's the game. Those are the hours that we play between, so we just got to deal with it, and hopefully we can bag ourselves some winners again. Are we onto something with these equity markets? Are they going to keep moving lower? What do you think?
Yeah, I mean, there doesn't seem to be a lot stopping them at the moment, and again, as we're talking, DAX is pushing towards the lows, so I'm sort of quite happy because I'm still short of it. So, but
right, stop showing off.
You know, that's just the way I roll. I suppose it's one of those things when you sort of like, when one actually does, you know, play out, you sort of do get a bit excited. We're actually, but so it obviously doesn't happen often because I don't really talk about it a lot. 15,164 is a little bit of a level. So we're approaching that now. This is not something I would fade and sort of think, oh, we've done enough now, we're oversold. That's a load of rubbish. I don't believe in all that. And you can see that the same sort of levels in the DAX. So FTSE, you've sort of like, you almost convinced me we should be looking at FTSE from here, but
I mean, I don't know. These things just bounce back so viciously, don't they? You know.
Yeah. It's what's happened. That's the play that's been going on over the last sort of like, well, it feels like a few years. You sort of like get the sell-off. Everyone gets convinced we're having a sell-off, and then by the afternoon, it's all over. By the shouting. So really, sort of like for me, gold and silver sort of like feels like the real one potentially we could play. I'm going to go with gold. I sort of think if we do manage to get that break above 1875, it could play out really nicely. I'll keep the stop quite tight. 67.75. Oops. So I'm going to put the stop in at 60.25. 750 just makes it easier for me to calculate the 4-to-1 risk reward, really. Yeah, so I'll have the stop below the swing low here, and I'm going to target a move. Oh, I like the target a move towards just below $1,900. So I think if we get a break of that 1875 today, that you know, $20 hop it would be nothing in gold. So 4-to-1 risk reward buying gold here.
Lovely. I absolutely can't make my mind up what I want to do here.
No, it's not great, is it?
No.
Timing isn't just. It feels like we've got to wait a little bit just to see what plays out, but obviously we can't.
Okay, this is what I'm going to go for. It's not the most exciting of pairs. It's Euro Swiss. We've broken out of a wedge on the hourly chart, and
that was exciting around about 2012 and 2015 from memory.
Yeah, that's right. we are overbought levels on the intraday charts, and we're rallying into what I've got as a resistance level on my intraday charts at 1.10000. So nice round number. Thinking that's going to do a job. Going to sell it here at 1.1005, so it's just ahead of that. Got quite a tight stop. I mean, it's not the biggest in terms of ranges, so we've got a stop at 1.1020, which is about 17 ticks, and I'm looking for a simple pullback to sort of where we were just a couple of days ago, really, at 109.46. So looking for 3.5R on that one if it plays out today, stating that that it is overbought on the intraday charts. Not that maybe means an awful lot, but we'll see. That's one that I fancy-ish today. So we'll see what happens.
Nice.
Okay, so news-wise, later today, as we touched upon, we've got US crude inventories at 3:30. Stockpiles fell by 427,000 barrels in the preceding week. So keep an eye on anything related to oil around 3:30. Prior to that, we actually have Canadian CPI data as well. That's at 1:30, and it's expected to rise to 3.2% year on year. So inflation numbers obviously creeping higher there as well. And then finally at 7 p.m. tonight UK time, we have the FOMC minutes. So anything linked to the US needs to be watched. So be careful if you are trading in and around that release of the minutes, because things could get a little bit volatile.
Spicy.
Yes.
So you're not here tomorrow, Joe, are you?
No, I'm off tomorrow, Friday. So you'll be holding the fort, Steve, by yourself, and I'll be back on Monday.
Lovely. Okay, mate.
Cool.
Have a good time away in Scotland.
Cheers, mate. Yeah, the weather forecast doesn't look great, but it never does in Scotland, does it?
No, it doesn't. No, quite depressing. Much like, yeah.
Oh well.
I'm sure you'll have a good time.
Yeah, let's hope so. All right, mate. Well, have a good one, everybody, and I'll be back on Monday. Steve, you'll be back tomorrow.
Cheers.
Bye-bye.